Hi, Gina Madeya from Windermere Yarrow Bay with October's Market Minute. Over the past month, I've had clients inquire about what to expect for housing values in an election year. Generally speaking, economic uncertainty, often spurred in an election year, causes market volatility. And experts agree, the closer the election gets, the more likely it will affect housing, regardless of who the candidates are. In general, presidential races breed uncertainty, which alters attitudes among home shoppers, sellers, and investors, and thus sways sale volumes and values. For example, this data set shows a 15% drop in actual monthly home sales during presidential election years dating back to 1963 versus a 9.8% drop in non-presidential election years. A kiplingers study examined the percent increase in housing prices in both election and non-election years, and with the exception of 2008 and 2012, the averages for both weren't too far off and netted 4% above regardless of whether or not it was an election year. In our region, this latest data from the Federal Housing Finance Agency of four-quarter appreciation through June of 2020 shows a year-over-year increase in home values of 8.6%, which is up from the prior four-quarter increase of 5.6%. So it's important to keep a balanced perspective and not let political uncertainty obscure your long-term goals. The reality is elections happen, and while they do have consequences, the status quo tends to prevail. For example, the chief economist from Myers Research indicates that the year after a presidential election is the best of the four-year cycle because housing demand is not lost as a result of political uncertainty, but pushed to the following year. In our region, demand for housing continues to outpace supply, further driving up prices. On the Eastside, we've seen 3 years of declining inventory from a high of 2.5 months in September of 2018 to the current low of 3 weeks or less. That decline in supply with increase in demand resulted in 43% of homes last month selling for above their asking price, up 4% from the prior month and 25% from the prior year. Seattle shows similar trends in both decline in inventory and percent of homes selling for above their asking price. The biggest driver in demand continues to be historically low interest rates that show no sign of going up anytime soon. Today's exceptional rates mean buyers have significantly more spending power than they did a year ago. That is, if they can prevail in our hyper-competitive market. So for now, despite COVID and in spite of it being an election year, our region seems to remain insulated from whatever potential negative impact the market uncertainty might have on housing values. If anything, the rapid rise in home prices is making affordability a real challenge, and that, to me, may have longer-term impacts than whatever happens on November 3rd. If you're on the market to buy or sell and would like to talk further about how to be successful in this market, it would be my pleasure to speak with you, so please don't hesitate to reach out. I look forward to hearing from you.